Hi, good afternoon. Welcome to the marketplace. Coming up, IMF team expected in town this weekend for crucial talks on the economy and the 2025 budget. And later, Joy Business Advisory Series will focus on environmental, social, and governance principles, which are becoming a requirement for businesses. We'll discuss steps SMEs can take on their ESG journey. My name is Darryl Kwao. Thanks for being with us. Details coming up. And thanks for being with us, everyone. The IMF team is expected in town this weekend for crucial talks on the economy and the 2025 budget. Here's George Jaffe with the latest.
The visit by the IMF team is coming at a time that Ghana is getting ready for the next round of program engagement later this year. That fourth review Joy Business understands will be based on the fiscal data of the country ending December 2024. However, for this particular visit, which is not a review mission engagement, but will be purely based on the economy. This is because this administration has talked about resetting the economy. Therefore, the IMF wants to understand how this will be done and its impact on the broader IMF program. The team would also want to get some update on the 2025 budget, which should be presented to Parliament next month. This is because whatever policy measures that government will announce should be in line with the broader IMF program. Another issue that would come up strongly during the 5-day visit with the progress that Ghana has made on restructuring its debt with external creditors and how it is planning to complete the process when it comes to engaging the commercial creditors. The fund would also be looking forward to see how government will be planning to fill the more than 10 billion cedis revenue hole that will be created when Finance Minister Dr. Tufosun goes ahead to remove some taxes like the COVID-19 levy, betting tax, and the e-levy in the 2025 budget.
Well, joining me on Zoom, Manager Macroeconomic Research, GCB Bank PLC, Courage Boutique. Good afternoon to you. Thanks for joining us. So, just how crucial are these talks, especially after this new government has signaled it may request some changes to the IMF program and an extension probably?
Oh, good afternoon, and good afternoon to your listeners. I think it's quite routine for each one of the budgets under program. You would have to get the IMF's input as to your projections and how that tallies with the overall expectations under the program, the targets, and how you're going to achieve that, your revenue projections, your expenditure assumptions, and all that, and then the programs and policies you are going to roll out, and how that will support or distort the overall macro balance and then the correction of the economy. Remember, the theme for the IMF for the last review has been for Ghana to stay the course on fiscal consolidation, and there are predefined parameters that need to be met in that regard. So these will likely be conversations to align. I'm sure by now the finance minister and his team would have put together some numbers, and they would have had a sense of where we are headed on the fiscal side of things now. So they'll go through those numbers, agree, disagree on issues, and then fine tune them. Ultimately, in getting ready for the presentation somewhere maybe later in March, really. So I think it's to be expected under the program. And maybe where it gain extra significance may be the promise of the current government that they would have to look at some of the program parameters and renegotiate some terms. I am not sure if that is coming in this particular meeting we are talking about. But if it does, then it would also be expected in that you will have to fit your programs and policies into the IMF program. I mean, that program was designed by the actual government. They had clearly their programs and policies and priorities set in there, and the fiscal parameters and limitations were defined based on those. So if you are having a new direction and you are talking about revenue mobilization in different ways, you are talking about new expenditure priorities and all that, it's a matter of aligning to see what is possible, what is not possible, where to put the limits and all that, and conversations about what timelines do we need to even achieve what targets and all that. So I guess it's a routine monitoring exercise from the IMF side and a routine consultation exercise even from the government of Ghana side to try to align on what the targets are and what programs are being rolled out and how that fits into the assumptions under the program.
Well, speak about what is possible and what is not. The government has indicated it's going to take off some taxes. We expect that announcement probably in the 2025 budget. How are they going to convince the IMF that this is the right way to go? How are they going to make up for the revenue? I mean, what do you anticipate they are going to tell the IMF?
Well, yes, I think Arthur Forson set the tone during his vetting. He's talking about quality and efficiency of expenditure as opposed to if you like, raising more revenue as in imposing new taxes and all that. If you look at the 2025 indicative budget, I mean, the three taxes that are under question will rake in just around a 10 billion. If you are cutting off a 10 billion, the question is, how do you close the gap? What is expected growth in revenue for the year? Where is it going to come from? Where do we do the adjustments? Where does compliance enforcement come in? And he also was quite heavy on expenditure, front-loaded expenditure rationalization.
Okay.
My argument has been that the budget as it is already very rigid. We know the cost items on the budget and what percentage of our revenue consumes. So there is only a marginal room for cuts. But then the argument will be if you are doing front-loaded fiscal consolidation in what areas, and how does it jeopardize or support the fiscal consolidation and, if you like, the correction in the fiscals that we are seeing. I think those are the arguments they must make and make forcefully back with numbers to the IMF to be convincing that, yes, we can cut taxes, but yes, we can rationalize expenditure also, and then we can stay within the limits of the program. And even if there are adjustments to the timelines of the program, the overall projections to fit into those revised timelines and ultimately the targets and expectations under the program.
We've got just a minute, Courage. We are going to be talking about the debt restructuring program as well as energy sector debts. How well do you think the government has done, really, the country, I should say? I mean, the new government just assumed office.
I think the debt restructuring is almost out of the way. What is left is the commercial side of things, which I understand negotiations are underway. I think the bigger problem is the energy sector issues. You talked about ECG and then how much they are collecting. You talk about the legacy issues and all that. There has to be a way to resolve it. And I think the first step is to stop those, if you like, arrears that go to the Ministry of Finance at the end of every month out of under collection from ECG. We need to stop that. And how do we do that? Is it tariff adjustment? We need to take the bold decisions so that we stop the leak or where the bloat is coming from and then tackle now the legacy issues. I think that is the point they need to start from. There's the talk of privatization of ECG. I'm not sure that is a solution, but I think if it's a tariff issue, let's deal with the tariff issue. There are two main issues there. if you like, transmission losses and technical losses. What are the solutions to them? One of them will need a huge capital outlay, and others are just behavioral changes and enforcing compliance. We need to start from those angles, and then from there we can proceed into the weightier issues, really. But if we deal with the recurring issues in the energy sector, and then we can now focus on the structural issues, or if you like, the legacy issues, then we would have been making progress to solving the energy sector problems.
Okay. All right. Courage Buti, I appreciate your time with us. Manager, Macroeconomic Research, GCB Bank PLC. I appreciate your time. Thank you. All right. You're watching The Marketplace. Still ahead, the Joy Business Advisory Series. We're putting the focus on environmental, social, and governance ESG principles, which are becoming a requirement for businesses. Don't go anywhere. All right, welcome to the Joy Business Advisory Series. In today's rapidly evolving business landscape, environmental, social, and governance considerations are increasingly shaping the way companies operate. Well, whilst large corporations often have dedicated resources for ESG compliance and integration, small and medium-sized enterprises face unique challenges. Well, today on the Joy Business Advisory Series, Osei Asansu Entry, Senior Manager for Governance, Risk, and Compliance Services at KPMG, joins me in studio to discuss practical steps of how SMEs can embark on their ESG journey. Thanks for joining us here on the Marketplace and on the Joy Business Advisory Series. First off, what are the current compliance expectations and key ESG factors that SMEs in our local context should prioritize?
Great. So thank you very much for having me here, and good afternoon to your listeners. It's great to be here. I mean, as you mentioned in your introduction, ESG is topical now, and not just for the large corporates. It's important that our small and medium enterprises also catch up with all that is happening. I mean, ESG in simple terms is a framework that, you know, it's being used to measure businesses' stewardship towards one, the environment. Number two is the society, the social aspect of it. And then governance. I mean, governance in terms of how the business is set up, how the business is structured for sustainability. I always like to go back to the definition of sustainability by the UN, which goes as ability to meet the needs of today without compromising the needs of the future. We have our SMEs that we believe that it's important that they survive beyond just now. And therefore, to your question, it's very important that SMEs embrace this whole concept. Key amongst the priorities, one, environmental. What stewardship are we having towards the environment that we source all our raw materials from to produce, to get into business, our society, our employees, our stakeholders, our customers? I think you had a session last time around customer experience, which is very important for SME. If you have your customers, if you have your right strategies towards them, you're able to earn their loyalty, which for you as an SME is a good business position for you. And then I also mentioned about the sustainability of the business itself. I mean, we have a challenge of our SMEs not typically going beyond first generation. And the question is why? Do we have the right structure such that if you, the vision bearer, you are no longer available, somebody can also take up the vision and run with it? So it's very important for businesses, especially our SMEs, to embrace this concept.
And so how do these compliance expectations differ between SMEs and large corporates?
Typically, you'd have these compliance expectations more stringent on the large corporates. And I mean, expectedly, because they control much of the value in terms of even investments that are coming in there. They tend to get much of it, and therefore the requirements on them are stringent. It's not even just about the local requirements. There are also global requirements or global compliance expectations of them, because now it's one world that we are all playing or doing business in. So global compliance requirements are also heavy on them. But because these SMEs usually tap from, you know, the resources of these large corporates, some of these compliance expectations on the big corporates, some way, somehow, you know, are transferred to them. so that whilst as they meet those expectations, then invariably the large corporate also is meeting it. So it's tiered in some sorts, but just as there are requirements for the large corporates, there are also some level of requirements or expectations from the small business.
What, just by way of education, shed some light on the expectations for SMEs.
Okay, so you know that based on the business or your line of business, your expectations will be different. So for example, a typical business that is in, let's say, the agri-business or manufacturing, you'd have your EPA regulations to deal with. You'd have some requirements from the Standards Authority to deal with. You'd have some requirements on our Labor Act to deal with because you are dealing with people. Some chemicals, or based on the line of service that or line of business that you are in, the requirements will differ. And then also now what we are seeing with our small businesses is because they're also sourcing funds from, these large corporates, some of the expectation, the covenants that these large corporates have with their development partners are being transferred to them. So for instance, if you're supposed to have, let's say, a governing board as an SME, and it's because it's a requirement from the facility that probably you're sourcing from, a bank A or bank B, then that again becomes also a compliance expectation on you.
Yeah, I mean, this discussion is really focusing on going beyond compliance.
Definitely.
And, the SMEs, they're the backbone of the economy, right? And they have to survive. Some of them are just at the survival mode. So isn't compliance just enough? Why do you need to go beyond compliance? Great
question, Daryl. So I think that the compliance bit is the baseline, because you know that the import of compliance really is to preserve the value. It's baseline so that we keep everybody in check. But I believe that our SMEs and our businesses and our entrepreneurs, as they have and hold the visions for their business, do not just want to settle at meeting baseline needs. Businesses will want to go beyond survival. I mean, if you look at our business life cycle, that is it. You need to go beyond survival to growth and now to sustain the growth. Okay, so once you are complying, you are just meeting the baseline, and therefore it's important for them to look beyond that so that they can tap into the value proposition that is beyond the compliance. So we speak about your risk management, because if you're able to embed and integrate ESG into your business, it helps you in a way to manage some of the risks that you're exposed to in terms of even your people, your talent retention, and the loyalty that we spoke about, your customer loyalty, your customer experience, or your people, your team experience, and even your succession, because the governance pillar of this whole ESG will require that you put in the right structures for accountability to your stakeholders. Right structures for SMEs in this case would be, let's say, even your succession plan, so that you have a succession plan such that if an investor or if a company, a bank is looking at, investing or providing you some fund, it knows that beyond just this first generation, we have the business, continuing on the going concern concept.
So you talk about structures, where do SMEs begin from on their ESG journey?
Great. So at KPMG, we have a model that we help our clients, SMEs, with to do this, right? Starting from the diagnose phase. Because as you mentioned, and I like the term you use, that it's a journey. It's not an end in itself, so you need to start small. The starting point always is to understand as a business what matters to you, what matters to your stakeholders. And that is in a big term called your materiality assessment. You do that assessment on your business to say that, okay, these are my risk areas. These are the areas that I can get some opportunities from as a business. Right? From that, you move on to strategize, because once you know where you are, now where do I want to get to as an SME? So for instance, if as an SME, a company A in, let's say, agribusiness want to tap into the European markets to sell its products into the European markets, you know your position through your materiality assessment, and now you have a vision of tapping into that. What strategy do I need to put in place to be able to meet the requirements of the EU market such that I can sell my product to? You know that one of the biggest challenges with our SMEs is access to market. So once you have that strategy, now you move on to operationalize those strategies. It's just unfortunate that sometimes we see beautiful strategies but without any action. You know that strategies is not just enough when you don't execute it. So you need to put in the right measures to say that, okay, these are the very fine things that I'm doing to achieve the strategy. And the last point, which is also very important, is about measuring and reporting. Some businesses are doing great things, but you and I do not even know about it. Much more an investor sitting somewhere who wants to invest in a business that aligns with their thoughts. So it's important that as you go through this cycle, you have a means as an SME to project the good things that you are doing and attract some of these goodies and funding out there.
Let's talk about the risks and potential challenges on the ESG journey for SMEs.
So I think with our engagement with our SMEs in the recent engagements that we had, I think one of their biggest challenges is even education, knowledge about this concept. So it's very good that you're using this platform to promote.
Yeah, because I wonder how many SMEs consider this a big deal.
Yeah.
You said earlier, survival mode, that's what SMEs are on.
Exactly. I mean, they're going on survival and that's it. But the level of understanding of this, because if you don't understand, certainly you don't have any idea of doing anything about it. So that is one big challenge that we find with our SMEs. And it's not even just with our SMEs, even our big corporates, depending on the things that they want to do, the competencies may not be there to do that. And therefore, that's one big challenge we see with them.
Yeah. One quick question, actually.
Sure.
I have two. We are going to do it in 2 minutes, I'm told.
Okay, Darryl.
So, I mean, the first one is a perception that ESG, I mean, is expensive. Is it true?
I mean, to some extent, is it?
I mean, for SMEs, that?
For SMEs, to some extent, it can be. So that's why we always need to circle back to the base, which is materiality assessment. What matters to you? Because what matters to, let's say, Joy, will not be the same factors that matters to Asenso Enterprise. You see, so once you measure what matters to you, then how much you spend on it will not be as much as Joy, a big company like that, is spending on their ESG journey. So you need to do that measurement and then gauge the investment that you are putting in.
And what are the incentives if an SME is able to, I mean, undertake the ESG journey, is successful at it? How does it profit the business?
Okay, so there are a lot of ways that the companies are able to get the return on that investment, one of which is access to capital. Even now in Ghana, we have a number of banks that have different products targeted at these SMEs, once they're able to meet these expectations. And also now we have a lot of DFIs, that is development partners, who are bringing funding into the country, who need some of these people. Impact investors are around, looking for businesses that are doing impactful things about our environment, about our societies to invest in. So that is an incentive. Our own GIPC is also available to support business to do much more in that.
Great. Thank you so much. Osei Entry, Senior Manager, Governance, Risk and Compliance Services at KPMG. Appreciate your time with us here on The Marketplace and for the Joy Business Advisory Series. Appreciate it. We'll have you back sometime soon.
Definitely.
Hopefully. Thank you. And thanks for watching, everyone. More news on our website, nigeriaonline.com/business. We are back same time tomorrow.